Good morning. Welcome to Forex In Four. Today is Tuesday, September 20th, 2011. Interesting thing going on in the markets today. I guess nobody really cares about risk, apparently, based on what we've been seeing in some overnight action. What we're looking at here is a 30-minute chart of the euro. And just overnight, last night, S&P came out and they downgraded Italy's credit rating by one notch. I believe it went A+ down to A, and this sent the markets lower. Okay, overnight in the Asian session, I think they had a little bit more respect for not only the actual downgrade itself, but just for the overall situation going on. So Italy gets the downgrade. The credit default swaps go up a little bit higher. Their yields are rising a little bit. Okay, and you can see that the euro sold off overnight. But we still sat above this S1 pivot support here on the daily, even though we're looking at the 30-minute chart. All right, and you can see right here that boom, euro's bounced and we're actually moving higher. We're up in the 137 area. All right, well, what's sort of happened since the downgrade? I mean, one would think that S&P was sort of piling on here, and why would the euro be bouncing here? Well, it's because apparently they're having productive talks with Greece. And the troika, if you will, the lenders that they need to receive their next tranche of bailout money from. Now, we know that there's big problems in Greece. Okay, we know that people are back to the streets. And it doesn't look like there's the political will to get the austerity done that's required of Greece in order to receive these bailout funds. So, nevertheless, markets are fairly content with that, and they're bouncing higher. And you can see euros; it's reflected in euro here at 137. All right, we can also see, just looking at the correlations, the effects S&P futures, they're trading higher. Okay, we've got stocks in Europe higher. Okay, and boom, here we are right up here to this 1212 area, and perhaps looking to go even higher this morning here in the U.S. I'll get to what's going on in the U.S. here in a second. Just want to show you the Aussie. Okay, the Aussies also got the same correlative effects here that you see with the euro. All right, but they had the added benefit of the release of the RBA rate policy meeting minutes overnight, and basically they said that they were well placed, was the quote, to respond to new global growth risks. Okay, whether it's inflation, whether it's a decline in the global economy. They've decided to keep rates steady where they are, but they're basically saying we have the ability to go up either. Go up from here or go down from there, depending upon what's needed. So it looks like they're going to sit tight for a little while, but nevertheless, that's enough to get the Aussie to bounce here, because we know about the interest that you get from the good folks in Australia. All right, so some of the other things going on here, we can just take a look at, let's look at Euro Swissy, make sure that's still right in the 120 range. Sure is. But let's look at Dollar Swissy, see if anything's happening there. All right, you can see that dollar had strengthened a little bit. Now it's starting to weaken versus Swiss franc. And in Switzerland, they had the SICO economic forecast that came out. Basically, the government's lowered their forecast for Swiss economic growth based on the strength of the currency. So that was one of the things that they mentioned there. And then we've also got figures. Let's go back to Europe. Okay, I'm not certain that this has really been the driver, but we had figures in Europe that came out that show that German PPI figures came in lower than expected, 5.5% versus 5.8%. All right, and then that meant that the month-over-month number declined. Prices declined 0.3% versus the expected no change. We also had sentiment figures that came out in Germany, the ZEW surveys. Okay, and the economic sentiment was lower. All right, the Eurozone economic sentiment was lower, and then the German current situation was lower. So three big economic surveys that they do in Germany, and all of them came in lower than expected, which isn't surprising based on what's going on in the Eurozone. So that's that's not a big shock to us, but. Later this morning, we're going to get in the U.S. We're going to get building permits and housing figures, housing starts, and they're expected to decline. Again, that's no surprise here. Now, what else is going on here in the U.S.? Well, markets are sort of one of the reasons that euro's bouncing here is that people think that on Wednesday the Fed is going to announce some further accommodative monetary policy. Right now, everybody's talking about Operation Twist, where they're going to attempt to to basically twist. The reason I call it that is because they want to twist the yield curve, okay, and they're going to go out and start buying longer-term debt, okay, to keep rates even lower for an even longer period of time. But we may not get that, and if we do get that, it may not be that significant. I mean, one of the things you have to realize for the economy right now is that it's not a problem of liquidity here in the U.S. There's plenty of money to go around. It's not even a problem of rates being too high. All right, rates are at near all-time lows. All right, the problem is confidence. We don't have any confidence going on about what's going on in the government, about jobs, about all these different things, and that's something that the Fed cannot fix with monetary policy. Well, yesterday we got President Obama's I don't even know what it was. I guess it was a campaign speech. It was supposed to be a deficit reduction bill. I don't know what it was. And as you know, I thought yesterday, obviously, he's not serious about getting anything done. He's just setting up the stage for the debate that's going to occur in 2012 when he faces re-election. And quite frankly, it's just been one major disappointment after another. All right. Meanwhile, the economy here in the U.S. is floundering. All right, unemployment is not getting better; it's getting worse. All right, we're talking about now raising taxes again. All right, another tax raise. He just cut taxes, but now he's raising taxes so that he can reduce the deficit, even though the deficit's increasing. I mean, I don't know. I think he knows if he's coming or going, and quite frankly, I think people have just stopped listening to him and have relegated themselves to the fact that if they're in a decent economic position right now, that they're going to be comfortable to stay there, and they're not going to take on any new risk. And if you're not in a good economic situation, you better figure out that it's probably not going to get better anytime soon, and you're going to have to take the appropriate action that way. But right now, fiscal policy in the U.S. is a disaster, and that's one of the major impediments to growth here. All right, businesses aren't hiring because they don't know what their taxes are going to be. All right, this new overbearing regulation that's out there, it's just one thing after the next, and it's really killing jobs. And to say anything otherwise it would be disingenuous. So that's really what's going on today. We've got this little bit of return of risk appetite here. All right, despite the downgrade in Europe of Italy. All right, on a side note, I've read a side story. It looks like Ireland's doing very well. All right, but we know that if Greece goes, there could be contagion to the rest of the Eurozone, and that could be a big problem. So I'm a little bit surprised at some of the risk-taking here in Europe, but we'll see what happens. And, just looking right here, dollar-yen, you can see it's just still trading its little range. As long as it stays, above that 76 area, I think the Bank of Japan is going to sit on the sidelines and not have to do anything. But, should this yen strengthen here versus dollar significantly, perhaps on more Eurozone problems, it will be interesting to see if the Bank of Japan would consider intervention at that point, but I'm guessing not. So that's really what we're looking at. Oh, who do we forget? We forgot the pound. Pound also moved lower, 156.50 overnight, but also bouncing back up as well. So, you can see the same trades going on really with dollar there, oil higher as well. And, that's really about it. So we're going to have to keep an eye on the Eurozone situation. That's obvious. And we're going to have to keep an eye on what Bernanke's going to do tomorrow. I'm guessing that it's not going to be much. All right, even though Obama's speech came out and he laid out the groundwork for some sort of policy and nobody thinks it's going to pass, at least Bernanke can take a look at that and say, well, look, he came out with policy, so there's something there. So we may see some continued dollar strength, especially if we don't get some news out of Greece here pretty real soon. So that's what I'm looking at, folks. Good trading to all.